Niambie mrembo. Safi mama.
So we are doing this is May 20. This is for a diploma. So I want, because the diploma is somehow the one that is good for basic knowledge and information, because we can't go to advanced without knowing the basic things. It is 2011 question. Question 1. So the question read: Alice and Bibian and Christine have been in partnership for several years, sharing profit and loss in the ratio of 2 to 1, respectively. After charging an interest on capital at the rate of 10% per annum. I hope you are
Yes.
where it's not feasible. Then to say on 1st April 2010, Christine retired from the partnership, so that is the retirement date. Alice and Bibian agreed to continue with the partnership and to share a profit and loss equally after charging interest on capital at the rate of 10% per annum. For the purpose of retirement of Christine from the partnership, land and building were revalued at 22 million, furniture and fitting at 0.3, full stop. Goodwill of the partnership was valued at 1.2 on 1st April 2010. Another point, the partners agreed that goodwill should be written off immediately. So if the goodwill is to be written off immediately, you have to open an account for goodwill. Higher. The relevant adjustment relating to the above transaction are not being made when the following trial balance as at that 1st September 2010 was extracted from the books of the partnership. So we have the account there. We have capital account, Alice, Bibian, Christine, each with 800,000, 700,000, 600,000. Current account, Alice 200,000, Bibian 200,000, Christine 100,000. And then we have drawings. Alice have 180,000, Bibian have 140, and Christine 180. Then to the next, inventory in bracket as at 30th September 2010. Price ni 500,000. Land and building 1.5. Furniture and fitting. Furniture and fitting for 400,000. Motor vehicle 800. Account receivable 470.
Yes.
On account receivable 470,000. We have account payable 200,000 on a credit side. A prepaid insurance. Account receivable is 470,000.
Then account
Payable 200,000. Then we have prepaid insurance 50,000. Accrued electricity 20,000. Bank balance 1 million. And the net profit for the year is 2.4. Additional information. Assume the net profit accrued evenly throughout the year. Assume the net profit.
The last part is
bank balance. Profit. The net profit for the year.
Okay.
Net profit for the year. Additional information. Additional information. Assume the net profit accrued evenly throughout the year. That's number 2.
The profit
accrued evenly throughout the year.
Assume the profit accrued.
Yes, accrued evenly throughout the year. That's number 2. Christine agreed to take on on a retirement one of the motor vehicle at a book value of 400,000 and the balance due to her is to be paid in cash. The balance due is to be paid in cash. Required income statement for the year ended at 1st September 2010, partner's current account, partner's capital account, and statement of financial position as of that 1st September 2010. Okay, so before when we go to income statement, all that one, we need to prepare to do this working, because we have the valuation there, we have the one which has been written off, we have the goodwill. So first, let's prepare because in the note we have been told, for the purpose of the retirement, Christine from the partnership land, building or value this one. So let's open the land and building account first as working. So let's have working one. Let's have workings. So we have account here, land and building. So I can't have land for building. Balance product ya land ilikuwa ngapi?
1.5.
Naangalia quarter balance. Ilikuwa 1500, right? And then after the retirement of this partnership, waka revalued. So that is the balance carried forward for the next year. Waka revalued at the how much? That is 2,000. We have cut the zeros. So meanwhile, credit side is more than the debit side. So there's a revaluation what? A revaluation gain. Due to revalue our asset upward. So kuna revaluation gain. That is the balancing figure. Because this one should be ni 5. Okay. Then we opened, we go to not working 2. Let's open a T account. They revalued another which furniture and fitting. So balance product for furniture and fitting is how much?
400.
400, yes. They revalued at how much? That is balance carried out. 300, right? So you have furniture and fitting at 300,000. Eh?
From the which? Oh yeah. Okay.
From the same statement, for the purpose of the retirement, Christine from the partnership land and building were revalued at 2 million, furniture and fitting at 300,000. Have you seen that? Have you seen that?
Yes, I've seen it.
So meaning there was a revaluation loss here. There's a revaluation loss of how much? Of 100. Then is there any account? Goodwill of the partnership was valued, that one, so that one. So things to may open these two accounts. Na tumeona account affected hapa ni revaluation account. So we have to open a revaluation account. Revaluation account tutarecord nini? An income. You have to open a revaluation account. A revaluation account. So we can start a revaluation. We didn't see the balance product for revaluation. So balance product up. and put dash, and also balance product. Balance product on the other side is dash. And then we go back to the land. In the land account, to may debit a revaluation gain, that is an income. So in a revaluation, we should credit so that we absorb the double entry. So hapa tutaweka land and build. Land and building. So make sure I note down easy working. So land and building tuko na 500. And then kuna furniture is a loss, so we should debit. Ngapi? 300. So the balancing figure ni ngapi?
Valuation loss 100.
Oh, this one should be 100. So balancing figure iko kwa hii side ngapi?
400.
400. That is the balance carried down. So that one we should put what? Si umesoma notes, imesema where there is a revaluation profit, we should share that revaluation based on the old profits.
Old profits, yeah.
Yes. So the this one should be 400. So the partners will have to share that revaluation based on the old profit. So we will use the old profit that is due 2 to 1. We share
Old
that
profit.
Yes, we share that loss. Okay. So we have done with the evaluation account. We can now open a goodwill account. We want to open goodwill account. So goodwill account. Yes?
Amesema analeta. Hebu ngoja kidogo.
Yes. Nzuri. Mina. Okay. This one should be 600. And again, this one should be 600. So we have to write off this account, meaning we will balance this account at 1200. This one at 12. 1200, yes.
Sawa. Ile asubuhi ilikuwa inaitwaje ile exam? Sawa. Okay, yes. Yeah. Mm-hmm.
Okay, so we open partners. We open partners capital account. So we will have a long account here. And we have like 3 columns. So we will have Alice here. Vivian and Christine. And then we have detail here. I'm a particular. Can still rule this one. Kama kuna swali na involve a lot of procedures. Ni partnership.
Yeah.
It take a lot of time and the same marks, 10 marks, 12 marks na hizo zingine. It consume a lot of time. So again, this one is Alice, Vivian, and Christine. So this is the partner's capital account. So here we will have the balance product, which we have been given in trial balance. Alice alikuwa na ngapi? Capital account. I'm saying we have 800. So we have cut zeros. We have 800, 700, and 600. That is the capital account. That is under capital account. Then again, tulisema hii capital account, what will affect this capital account is balance product, goodwill na revaluation peke yake. Hizo tu ndio zina affect partners capital account. Hakuna kitu kingine uta include. Balance product, goodwill na revaluation. So hizo 3 items.
Balance product,
goodwill
and revaluation.
Revaluation. So hizo ndio ita affect capital account peke yake. Okay, so let's see our revaluation. Revaluation yetu ilikuwa debit side wa goodwill account. So hapa lazima ikue ilikuwa una debit side hapa revaluation capital account. So hapa lazima tuiweka hapa, so tutaandika goodwill. So account affected hapa ni goodwill. Goodwill tutakuwa na yenye iko, tuweke kwanza yenye iko debit side, kuna 480 na hapa ni 120, and then kuna on a debit side again capital
240.
Oh, don't use. Oh, that one is the 240. Okay, and then we go to on a debit side again goodwill. We have 600.
Goodwill
should be on this side. We'll have 600. So that one is a dash. And then again, we tumesema ni 2 item in affect. we have revaluation. Our revaluation ilikuwa ngapi? Revaluation. So revaluation ilikuwa on a debit side, so kwa partners inafaa kuwe credit, tuko na 160, 160 na 80. So we have 160, 160, and this one is 80. So now you can now write the profit to be shared. We will share it among the partners. That is Alice, Vivian, and again Christine. So for the profit tutashare, ukishare hizi profit 105, so tutatumia still the old rate, so it will be 2 over 5 times 10 of 95 itakuwa ngapi? So hiyo tutaileta hapo. The same case here,
438.
2 over 5 times 40, 10, 95. Say this one is 438. So it will be the same with this one, 438. What about this one? So it will be 1 over 5. We multiply by 10 over 95 to give us how much? 219. So meanwhile, ukiadd hizo zote nafaa itupie total ya 1095. So that here we have nil. The same case tumeshare kwa hii side ingine. So Christine atakuwa na ngapi hapa? So hapa ni walikuwa sasa wawili. Christine alikuwa amesha retire. So tutakuwa na Alice itakuwa half times, because we have been told that they will share the profit equally, and we have Vivian half times 125 to give us the profit ya ngapi hapo? That is 1125 we divide by 2 to give us 562.5. So it would be the same, 562.5. We get the total here 1125. So that they give us what? Nil upper. Okay, subtract that 125 minus 125 should give you a nil balance. Ukimaliza hiyo, obviously ukiadd 105 plus 125 itakupea 220. That is what we need to subtract here, 220 to give you nil balance up. And that is all about the income statement. And that is all about the income statement. So do you have any questions regarding income statement?
Suppose you could have used the format that is in the notes. How could have been the result?
The format which is in the note.
Hmm.
The format which is in the note, have we been given they haven't apportioned. They have apportioned.
Yeah, I think what is missing is I think we have everything. The net profits. We have the interest and drawing.
That is for
the preparation account format.
Format or that one appropriation account.
Hmm.
So it is the same. You see, mine, I have ruled this one. If this one was for the whole year, no admission or retirement of partners.
Okay.
If there was no admission or retirement of partners, you see what we have in our format is just this side. It is this side. What we have in our notes. This side only. Ni hiyo peke yake.
No.
Yes. Ni hii peke yake. So kama hatungekuwa na admission ama retirement of the partners, we could have used that format.
Okay.
Yes. Because this format will help us to open the current account. Okay, so now we can now go and open the current account, partners current account. Then we go to balance sheet. Hey, it's a long question.
That's all for the cards.
A long question. You can now open partners. Partners current account. You have to rule it again. But kwa exam utafanya tu yenye. Now make sure unaenda na split. You just put figures. Don't mind about subtraction and addition. Just put figures as you go. You put figures as you go. Because accounting, financial accounting is an easy paper, but it will now, your accuracy and your speed will determine your pass. So we can have here, Alice. Have here Bibian. And here we can have Christine. Here we have detail. We have Alice. And we have Christine. Christine. Again, here we will have detail. Okay, so as in our format, tumeambiwa tutakuwa na balance product. Those are free marks, so don't miss those free marks. Tutafura unapata hizo kwanza. So we take it, that is the current account. We have 200. We have 200 and we have 100. And again, in our format, here we have interest on capital. Interest on capital. So how much is interest on capital? Ile to calculate. How much interest on capital?
For Alice is 4.
It is?
It's 4. No, here we go. The 10% of 800.
How much? So 10% of 800, we have already calculated that one. We have 80, 70, and that's right. And then we have what we include here again is a profit to be shared. That is a profit.
Umeleta. Sawa. Yes, for the income statement.
Yes.
You are talking about the last column of the income statement. Eh?
Yes, profit
80, 70, and 30.
Yes, that is the interest on capital, right?
Okay. Okay.
And then the profit shared ni ngapi? Juu yangu nimesongesha, so nisome. The total profit for the partners. So what you do, you will take the total profit. The first profit is 438 plus 562.5. Is that will give you how much?
562.5.
Yes, plus 562.5 to give us 10. 1,000. 1,000.5. Is it the same with this one? It is the same value, right? Yes. They were using the same ratio.
Yes, so
it will be 0.5. Just confirm.
Okay.
Let me check our income statement here. So it is the same. And then we have this one for
fix the figures.
19.
Let me fix the figures. Okay.
Are we on the same page?
Yeah, let me copy the last part. The 219.
It is 219. That is the profit, the total profit for Christine. We only take for the 6 months because the other 6 months she was not on the business.
Okay. Oh yeah, sure.
Have we exhausted item in debit credit side? I think there is no more. So now we go back to debit. We have drawings. We have drawings. Kuna interest on drawings. Ama ikiwa tena upate kuna loans.
It is the same thing, huh?
Yes, so drawings, we have drawings here. How much? Tuko na 180, 140, and 180. So we have 180 in a trial balance, 140 and 180. This one we have not been given interest on drawing. So basically we will balance off this account. So we will add 200 plus 80 plus 1,000.5 to give us 1280.5. What about Bibiant? So Bibiant, we will take 200 plus 70 plus 100.5 to give us 1270.5. What about this one? So it will be 100 plus 30 plus 219 to give us
349.
There is a value, we left it here. There's something we are missing here. The book. What about the treatment? Ulimalizia wapi treatment ya motor vehicle yenye alichukua?
We posted it as 400 for Christine. Then for Alice, no.
Tumeambia nini? Ali we have indulged. We have been told the Ali will take up that 400, that is the motor vehicle which we have credited because tuna write off Christine. So tunafaa to write off his capital his current account, the capital account. Juu hatakuwa kwa business, so tutamtoa kwa business, ndio? So lazima to write off his capital account. So capital account alikuwa na balance ya ngapi? Angalia capital account, Christine.
600.
No, balance carried down.
Oh, balance carried down.
Ngapi?
On the debit or credit?
The balance carried down
40.
ilikuwa side gani?
Ilikuwa 840.
Not 840. Si tulikuwa na 920, that is the balancing figure kwa credit side. Then tukaless the motor vehicle yenye alichukua ya 400. Tukapaki na ngapi?
Of 520.
520. So that one we should put it here. That is the capital account ya 520 because we are writing off his account. So you have to credit that balance. So atakuwa na ngapi hapa? That is 100 plus 30 plus 219 plus 5. 219 plus 520 to give us 869. Then now we can balance off now this account. So I will bring the same figures here. 8